Hi, everybody. My name is Oliver Davies. I'm the president of the Finance and Economics Society at Cardiff Metropolitan University. Today, I'm joined by Chris Parry and Rafik Omar at Cardiff Met, and we'll be discussing how resilient financial markets are right now. Before we dive in, markets have been quite volatile recently, particularly in large technology companies where optimism around artificial intelligence has driven strong rallies, followed by corrections. At the same time, geopolitical tensions in the Middle East involving Iran, the United States, Israel have also created uncertainty in commodity markets, in particular oil. So, with that in mind, let's start with the first question. So, markets have been quite volatile recently, with indexes like the S&P 500 experiencing pullbacks at points this year. Much of the earlier rallies have been driven by large technology companies and optimism around artificial intelligence. An example of this is IBM. They recently fell sharply, dropping 13.2% in a single day, the company's largest decline in more than 25 years, by the company Anthropic, by introducing tools capable of modernizing their coding systems, COBOL, which raised concerns with investors. Do you see this kind of volatility as a normal market correction after strong gains in technology, or does it suggest markets may be becoming more fragile?
I think fragile is a good word. Look, we've always said that markets hate uncertainty. And the problem, Donald Rumsfeld once said, part of the problem is the unknown unknowns, which sounds silly. But we've always had uncertainty. I think for me at the moment, we have no idea where the next set of uncertainty will come from. You talked about the tensions in the Middle East. On the one hand, President Trump says it's almost over. Whoa, yippee. Our oil price goes down. Great. The next morning, Hesketh says, oh, we're going to carry on for a while. It's not finished yet. The uncertainty surrounding the uncertainties, I think, make markets more fragile today than at any time in the last 20 years. Rafik?
Yeah, I agree, but the uncertainty also is coming from a different angle. You look at the tension in the Middle East,
Yeah.
and it doesn't equate to an $80 a barrel. No, this is $150 or $200 a barrel worth of uncertainty, and this
The
is
normal mechanisms just aren't working.
no, someone is keeping a lid on the prices. So through the financial markets, I think the Saudis.
There is some financial engineering going on.
Yeah.
I mean, we saw the president of the EU saying we are not adverse to releasing some of our strategic oil reserves. Well, it sounds great. Release 300 million barrels of oil reserve. Yippee, sounds like a lot. And it's about 20% of what the Europeans have got, and it's about 4 days.
Yeah.
So even if they release all the oil reserves, it's 12 or 14 days, which means that, as you suggest, the oil price should be at around 130, 140. But America politically can't allow it to get there because it hurts American consumers, and that's American midterms. It hurts all the allies. And I think a lot of America's allies have held their nose for quite a bit. But when it starts hurting the economies, especially at the pumps, because tariffs don't really hit consumers, obviously. Pump prices do. I mean, you're too young, old, to remember when petrol at the pumps in this country hit about £1.38 per litre, or 183 per litre. There was queues, there were people sort of standing in for it. It was just madness. And the government can't let us get there. It's uncertainty beyond uncertainty, and I don't think the markets know what to do with it. I think you're right. I think there is serious behind the scenes manipulation, layering, that the Saudis are gearing up to increase production when things calm down a little bit, and they will step in and say, we can ramp up production. Similarly, the Qataris. But there is so much of a waiting game, so much uncertainty, as you said, fragility. And most of the players are going, I'm sitting on my hands at the moment because I really don't know what's happening. We're not seeing a lot of. We talked about gold. We'll laugh about gold. Yeah, he thinks I've got too much in gold. I'm not sure I've got enough. But the gold price again should be higher.
Yes.
Given the level of uncertainty, yeah, and given all the sort of correlations that we would normally work on, and it isn't.
And
So,
it's funny enough, not necessarily enough that when the oil prices were going up, gold was going down.
Yeah.
And when gold when oil, and then when oil hit rock bottom during the just couple of days,
Yeah.
gold started creeping up. Yeah.
I can't help wondering how many professional investors. I'm not a professional investor. I'm a happy hacker. But I am sitting on my portfolio at the moment going, I'm not changing it because I don't know where to put it if I do. Yeah. And I'm thinking it's not a loss until I sell it. And even if I sold it, where am I going to do it? And I wonder how many other fund managers, active fund managers, are thinking, where do I go? Because it is everywhere you go now is a punt and a guess, because none of the metrics that we would normally use, none of the sieve techniques we would normally use, none of the rules that we would normally use are working, because we always look at saying, right, this signal says this, can I confirm it with somewhere else, like research? Yeah. TikTok says this. Yeah. Snapchat says this. It must be true. Yeah. If we can get, good free cash flow per share, good price earnings ratio, good dividend payout, stable management, yippee, it tends to be a buy. But none of the signals there's no confirmation out there for any decision we might make. And everything we might make, any decision we might make at the moment is a bit of a guess. And that's on oil. You keep looking at the links between oil, gold, silver. Yeah. And they're well planned, and there's good research on them to say that those correlations, they're breaking down.
Yeah.
Everything we look at
It's breaking down.
is breaking down quantitatively, and it's breaking down qualitatively.
Just to stop you, just purely because I think this moves on to this question. It sounds like you're saying that no one really knows where to put money.
Yep.
And they're just kind of thinking long term, keep it there. Worst comes to worst, I know what's happening with the markets. If I move it, more things are going to happen.
Can I find somewhere? It's not a loss until I take it, okay? But if I leave it where it is, the companies are still making profits, so I should be getting some dividends. But where do I go that I can be certain isn't worse?
Mm.
Am I jumping out of the frying pan into the fire? We've talked about in the past, the flight to quality. When equity markets get really, people dump into good quality corporate debt or good quality sovereign debt.
Yeah.
Is good quality sovereign
but
debt a misnomer now?
But there is no indication today what is good quality. And we said that there is nowhere safe.
Yeah.
If I say, okay, I'm an investor, should I go to the US? No, they are crazy. Okay, should I go to Canada? No, they are not really there. Should I go to Japan? Oh, the economy is going bad there.
Yeah.
And seriously, there is nowhere safe, and there is no good currency that you could buy into.
And just sit and not worry about it, in other words.
Exactly.
Yeah, I completely.
If you are in the market at the moment, and Warren Buffett used to say this before he retired. I'm not sure how retired he is, bless him. But he used to say it's not a question of timing the market. It's a question of time in the market. And you have to retain bravery to stay in the market when the paper value of your portfolio has gone down. You have to hold your nerve on the belief that it will come back, and you have to have that longer term view. I mean, we've always said you shouldn't be in the market with money that you are going to need within the next 5 years. If you're saving £50 a month, that should be £50 a month into the market over and above the £50 a month you're putting into your emergency fund and into your holiday fund and into your Christmas present fund. You don't want to be in the situation of having to take your money out of the market because you desperately need it for something else, because you can bet your bottom dollar that the market will be against you when you desperately. But if you can say, I've got a 5-year, 10-year horizon, yeah, which I don't anymore because I could be dead, right? But if you've got a 10-year horizon, this doesn't matter. This doesn't matter at all. It matters emotionally. It matters ethically and morally. But it doesn't matter about the value of your portfolio, because in 10 years' time, your portfolio will have recovered from this without you doing anything about it. Which isn't to say that in 6 months, 6 weeks, 12 months, there might be some great opportunities to jump into the market for things that have fallen badly.
Yeah, but what is breaking that strategy is the rise of the AI.
Yeah.
Because till now, we do not know what is the full impact of the AI and which AI company will end up on top. So out of every 10 companies that are doing AI, how many would survive? Which model will they adopt, and which industry will they affect?
But an AI is doubly hit in this because AI is very energy intensive for power.
Yeah.
What's going up at the moment? The cost of energy. So
Cost of energy, cost of energy is going up, and the share price of one of the biggest nuclear energy producers in the US is going down.
Yeah.
So it doesn't make sense again.
No, again, it doesn't make sense. It would be, if I had a friend at the moment saying, I've just won £10,000 on the lottery, I'm all sorted, where will I work, and I put it, I'd be going, I don't know. I might say, if you can promise me you don't need it for the next 10 years, put it into a nice index tracker. Yeah.
So just think real long
A
term.
global index tracker, compound the dividends, and just wait for time in the market and compound interest mathematics to be your friend.
So you were saying at the moment, no one really knows what to put money at. And then off the back of that, also, Jamie Dimons recently said that the markets may be underestimating risks and some investors' behavior are resembling patterns before the 2008 crisis. Are central banks now able to, like they were before in COVID and like they were before in 2008, able to step in as much as they were before? Because that's my concern, is I think banks aren't able to step in as much as they did before, or not willing to, just purely because the ramifications of those both happening.
I think they've got a little bit of space because a lot of the central banks have done some quantitative tightening in the last couple of years. So the balance sheets are not as bloated as they were 3 years ago. But in the last 6 months, most of those central banks have stopped the quantitative tightening. So it's like somebody who's they've been on a bit of a keep fit phase. Yeah, they've got a lot fitter. They're beginning to see some muscle definition. But so they could do a bit more quantitative easing if they need. But for example, I don't think the Bank of England could come out and do another 300-400 billion pounds worth of quantitative easing.
Is it the problem of central banks or investment funds that handle pensioners? So something like the Blue Owl and BlackRock, who are suffering from liquidity issues and are limiting the withdrawal from customers.
On some of their funds, they are, aren't they? Yeah.
So it's I don't think it's a problem coming from central bank as much as it's coming from big investment funds that.
Well, there are two sides to this, aren't they?
Pension.
Central banks have a habit of going, we need to help and support. And as Ollie says, can they do that? I don't think they can do it to the same extent, but perhaps a little. As Rafik says, some of the big, important, very highly powerful players on the institutional side are holding back on withdrawals. One of the things we don't know yet is whether that is purely driven by an excess of withdrawals, so they're shutting that down, or whether that is on the other side, where they're getting a reduction in monthly incomes. Are retail savers who put the money into these, are they cutting back? So are they balancing a fall in their income?
This is a double shot battle, because you have the baby movers
Yeah.
who's saying that, oh, the world is coming to an end, we need to enjoy life.
Yes.
Okay. Seriously, we need,
Nor would I.
yeah, we need to spend some money. And the generation that followed, that is contributing now to the pot, but the pot is much bigger than the generation that is actually paying into it.
And that
So
leads
any reduction because of cost of living
Yeah.
can heavily hurt the investment funds.
Yes. It is very and the Western financial system has still not got to grips with the problem it's known it's going to have for 30 years. If you look back in papers for 30 years, it's been, there will be a demographic pension crisis when people like Chris start drawing their pension and carry on living till they're 90. Yeah.
Enough in the pot, yeah.
Not enough in the pot. People like Ollie will have to keep paying it. People like Ollie will then think, well, I can't afford to buy a house. Why am I so? And we haven't dealt with that, and we're still not dealing.
So I'm not contributing to your pot, Ollie. No, Ollie. Okay, good.
Yes, yeah. And to be honest, that I think that demographic pension and aging baby boomer population is a bigger problem long term than this little uncertainty at the moment. And I don't mean to denigrate the tragedy that is happening in the Middle East. The impacts of that are far less on your investment portfolio, my investment portfolio, than this major problem that we've ignored.
My paternal uncle, he's in the U.S. and he's an active investor in the stock market in the U.S. and he used to work as an investment banker. And he was telling me that I was telling that the market is going down. What you're going to do with your investment, your pension, your funds? I said, I don't worry about it. I can take a 50% hit, and I'm still in the green. 50% hit. He's 78 years old, and he was saying that I can take a 50% hit.
I'm sort of baby boomer type thing. My portfolio can take a 20% hit this year. And I will go, oh dear, never mind. I don't want it to. Really don't want it to. But compared to the growth I've had over the last 10, 15 years, if I take a 20%, 30% hit this year, the Chardonnay will be down to 2 bottles a night from 3.
And then I guess, as we're all saying that now, realistically, my generation will end up having to put more money into the pot. Yes, to pay the pensions, and then we've got me at the end of the day. We've got, even before that, in my opinion, we've got employment problems for my generation. Yes. So we've now got AI in the mix, and you're looking at AI, and they're saying they're going to take X number amount of jobs. And it's true. If I was running those big companies, I'd be sodded graduates. You've got to teach them. Yes. Spend more money on them. I just press a few buttons and you've got someone who does the exact same thing.
Well, Elon Musk sees this as a benefit, doesn't he? He sees this as AI taking away the jobs, but still creating the profitability, so that the profitability will trickle down into it will trickle down into income for the people that don't work, which is lovely in a utopian society. In reality, it may very well be that AI will change the jobs and the work structure so the businesses do the work, they still generate the profitability. It won't trickle down. It will trickle across into, again, more dividends. And we could have, with AI, a larger, never worked underclass, in that way, that have very little ability to generate wealth.
And and they're kind of just stuck. If you're born in that class, you're kind of stuck in that class. You can't get out.
Yeah.
Yeah, and I guess the question is, what type of life that is that? If you can't go up or down, you're just stuck.
Well,
They give everything.
I suppose if expectations change and you don't expect 2 foreign holidays a year, but you are doing other things which you like in terms of creativity, which I keep getting told is what AI will help us do, is to channel our inner creativity. So you're painting and
You don't seem overly convinced.
I'm not overly convinced, but then I am a very old baby boomer. I lack the flexibility and the optimism that I had in my 20s. And one of the nice things about this job is you keep working with young people. And in every generation of young people, there are those who are flexible and enthusiastic and will do well. Yeah, not smoke up you, but you will, right? But then there are others who won't adapt, and it's them that I feel sorry for. And that's not there are those in my generation, and
It just happened.
it just happens. There are those who can take advantage of the opportunities by being flexible and being dynamic. Remember when we spoke to Will?
Yes.
Yeah?
Yeah, of course.
What did we grabbed every opportunity that came my way? Yeah, work like a dog.
Yeah.
Persistence. That's how I got where I am. That's where he got where he is. That's how people like you will survive. If you grab the opportunities that AI will undoubtedly give.
Of course, that's what people take for advantage. Of course, AI is going to take roles now, but because there's so little we know about it, I'm convinced they're going to create loads of opportunities as well. Yes, maybe not as many as they take, but there definitely will be opportunity. Yes, but yeah, it's a look. No one really knows. I think that's the problem, especially now.
And that's why we've got uncertainty in the markets. Nobody knows what's happening next Tuesday.
And then, Omar, would you agree with that, or what would you say? Would you say, with the job market, for example, obviously there's uncertainty. Do you reckon there will be more opportunities made, or do you reckon it will end up becoming an elite and then a class at the bottom where they just focus on the creative element of society?
I think the polarization of the economic social class, you will have we are seeing the decimation of the middle class. It doesn't exist anymore. Exactly like what's happening in every company. Middle management is disappearing. You either have top management and working class. Middle management, middle class is disappearing. So you will have people further down the chain in the manufacturing than doing jobs that even robots can't do for now. Okay. And you'll have people very high up who just collect the dividend, make the decision on the strategic level where we're going to invest the money next. Which is not a pretty sight.
No. But at one level, this is meant to be finance, not philosophy. This could be the end of the world as we know it in terms of work, as you open that door. I don't think many people of your generation will have the same structure around their career as I've had. Yeah, I had 10 years in banking, and I've had sort of 30 years now in teaching finance within the university. I think your generation will perhaps end up flitting for 5 years in one career, 6, 7 years in another, but always developing, always changing. And I was in finance, and then I ended up teaching finance. I think the opportunities for your generation will be, I was in finance, and then I ended up in sculpture. Then I became a racing car driver. Yeah. So massively different. And at one level, if I was 20, I think that would be tremendously exciting. When I was your age, everybody worked for the same company forever. Yeah. And you start at 18 and they kick you out the other end at 65. That doesn't happen. I've seen the changes of sort of two main careers. Others are seeing 2, 3, your generation, again, with the opportunities that AI will generate for you, you will have multiple careers or even parallel careers, you know. Will social influencer and TikTok star be the main, the monetization of that?
So it'll all be creative based.
It's all creative. I mean, I know 2 students within this university who are earning 4, 5, 6 grand a month being social influencers while they're at university getting their degree. What's the next stage of their career if they become and they go into finance or they go into marketing? Will they stop being a social influencer? And is the traditional career just something part-time that they do for fun, whereas the social influencing,
So you get the majority of their income.
is where they get the majority of the income? So I've gone into a marketing role. I don't care what it pays me really, because I'm enjoying the challenge of the creativity of marketing. But all my bills are paid by my subscribers and by the advertising I sell on my TikTok side.
But this will take us into the dark, murky waters of the social scoring. So if the whole society is based on being an influencer and living on social media, imagine that every person would have a social score, and if your social score goes down, you get disconnected from the rest outside.
Which I'm dreading going here because I know he knows this. He's feeding me this. There's an episode in the series The Orville. Have you seen The Orville? Do you know The Orville? Oh, that you know him. Did you know that? The Orville started off as a spin-off of Star Trek: The Next Generation, sort of comedy parody on it. Written by Seth MacFarlane, the same person who does Ted. In one of the episodes, they land on a planet where everybody has a button, right?
Yeah.
And instead of giving a tip, you press it's up or down.
Yeah.
And if you get to 10,000 dislikes,
You can't go places.
you're dead.
No,
You die.
You die. Yeah. So if your social media, if you post something that's so bad and it picks up, bam, by the end of the day, you could be toast, literally. But social media likes, dislikes, trolls, it's a frightening thought.
Yeah.
Yeah. I upset too many people in a seminar. I'm not suspended, I'm dead. You know that.
I guess finishing off, we kind of went through the whole extremities, didn't we? We went about what's currently going on now to what's going to happen to the end of us, really.
Yes.
So I was going to ask a different question about like a short takeaway of what's going on in the world now currently, but I think a better question is really, what advice would you give to? I think you've kind of answered it in the sense of take everything as it comes and say yes to everything almost, and try and be adaptive, learn as much as possible, do as many things as possible, and take it in your stride, I think is the best way to put it. Would you agree with that?
I think so, but also learn from your mistakes. You do have to follow your instincts. If something looks like it's going to be fun, you've weighed up the risks, do it. But also be brave enough to say that was a mistake, I shouldn't have done it, and learn from those mistakes. But that's true in investing as well. I go back to investing. My rule, my hard and fast rule, is once I'm up 20%, I'm out. I don't care. I'm out. I'm going. Yeah. Until with Circle, I got in on the IPO of Circle and I'm up 50%. I really made a killing. I'm thinking, and then I stayed and I stayed and I stayed. Right. Then I'm not watching it because I'm all happy. Yeah. Then the Americans introduced another piece of legislation that went through Congress. I lost overnight all the game. Did I lose anything in real terms? The trading costs. But if I'd have just followed my forever rule, I'd have walked away with 50%. I got greedy. And that, again, in investment, the worst thing you can be is greedy. The worst thing you can be is greedy.
The challenge for your generation, Ali, is to fight the confirmation bias.
Yeah.
One of the things that social media feeds on is showing you what you want to see. And when it comes to finance and investment, you need to read, you need to start reading about things that you don't agree with. So fighting your confirmation bias, be informed as much as you can, keep your eye peeled for opportunities. And that's it, really.
And only invest money you can afford to lose.
Final bit. Perfect. Well, thank you very much, both of you, for your perspectives. I really appreciate your insight and your views on the market and how my generation is going to end up at the moment. Thank you again for taking time to be part of the discussion. This has been the Finance and Economics Society podcast. We look forward to continuing these conversations in the near future.